What if the next big thing in crypto wasn't about Bitcoin, Ethereum, or even the metaverse, but a platform promising speed, innovation, and a community-first ethos? Sounds too good to be true, right? Enter Hyperliquid, a blockchain platform that's making bold claims, lightning-fast transactions, decentralized trading, and a vision to revolutionize finance as we know it. But here's the catch. Are these promises real, or are we looking at just another flashy project destined to fizzle out? In a world where hype often outpaces substance, Hyperliquid dares to stand out. It boasts jaw-dropping numbers, 200,000 transactions per second, $600 billion in trading volume, and a token distribution that puts community first. But let's not forget, we've seen this before. Platforms that soared to fame only to fall under the weight of their own ambition. Could Hyperliquid be different? Or is it yet another cautionary tale waiting to happen? Welcome to the Chainboy channel. Stick around, because in this deep dive, we're unpacking everything from its ambitious vision and blazing speed to the skepticism it faces. Whether you're a crypto enthusiast, a skeptic, or just curious about what's next in decentralized finance, this is the story you need to hear. But before we continue our talk, don't forget to hit the subscribe button to stay tuned to what is happening in the crypto world. And remember, everything we say here is not investment advice. Always invest wisely. Let's get started. What if buying stocks or investing in real estate became as simple as sending a text message? No middlemen, no red tape, just assets like real estate, stocks, or even art tokenized and traded on the blockchain. Hyperliquid facilitate this reality, creating a system where tokenization tears down barriers. Picture a skyscraper divided into tokens, letting anyone, anywhere invest with just a few dollars. But could this be a revolution in the financial system or another unsustainable hype? Why does this matter? Tokenization introduces instant liquidity. Need cash on short notice? Selling a fraction of your tokenized property or shares on a platform like Hyperliquid can be as quick as trading cryptocurrencies on a decentralized exchange, DEX. No geographic restrictions, no exorbitant costs. The goal is clear: transform traditional assets into liquid, borderless opportunities for everyone. With Hyperliquid's high-speed DEX and seamless integration of tokenized assets, the platform is trying to turn ambition into action. Capable of processing 200,000 transactions per second, Hyperliquid is setting the stage for the global tokenization revolution. Imagine tokenized stocks that also grant shareholder voting rights, or real estate divided into tradable tokens available at the click of a button. Now, let's explore how Hyperliquid's DEX platform is trying to reshape the trading experience. Trading platforms are everywhere, but not all of them promise to bridge the gap between centralized ease and decentralized control. Hyperliquid's DEX claims to do just that, by offering derivatives trading on a decentralized platform with self-custody at its core. It certainly ticks some of the right boxes, but is it truly a leap forward, or just another ambitious project in an already crowded market? One thing that does stand out is speed. Hyperliquid boasts the ability to process 200,000 transactions per second with block finality in just 0.2 seconds. For traders looking to capitalize on fast market movements, this could be a game changer, or at least a good selling point. Still, speed alone doesn't guarantee success. Beyond speed, scalability is a key feature. Hyperliquid has designed its platform to handle market surges without breaking a sweat. Whether it's retail traders dabbling in crypto or institutional players managing larger stakes, the system seems built for resilience. Yet the real test is whether this scalability can hold up as adoption grows, or if cracks will start to show under pressure. Hyperliquid has also made bold moves in derivatives trading, integrating perpetual contracts and spot trading into its blockchain framework. This is innovative, no doubt, but it's worth questioning if these features will be enough to differentiate it in a sea of competitors. Speaking of differentiation, let's take a closer look at the mind behind Hyperliquid's vision. Every groundbreaking idea starts with a visionary, and for Hyperliquid, that person is Jeffrey Yan. A Harvard graduate with a strong background in trading, Yan brings an impressive resume, having previously co-founded Chameleon Trading. His expertise in the financial markets gives Hyperliquid credibility, but does it guarantee the success of this ambitious platform? Yan's vision for Hyperliquid seems straightforward. to create a decentralized financial system that rivals traditional markets in both performance and usability. It's an admirable goal, but also one that many others in the blockchain space are chasing. The question is whether Jan's leadership can push Hyperliquid to stand out, or if it risks blending into the noise of countless other crypto projects. Interestingly, Jan has prioritized a community-first approach. Hyperliquid's decision to forego venture capital funding and focus on fair token distribution aligns with this ethos. On paper, this sounds idealistic, and perhaps even refreshing, but it also raises questions. Can a project of this scale grow sustainably without the backing of big investors? Or will it eventually need to compromise its principles to stay afloat? Of course, the true measure of a leader isn't just their ideas, but how they execute them. With Jan at the helm, Hyperliquid has made bold strides, but it's far from a guaranteed success. That said, every journey starts with a first step. Let's dig into how Hyperliquid's unique tokenomics shape its strategy and whether they deliver on their promises. At the heart of Hyperliquid's ecosystem lies the Hype token, a cornerstone for staking, governance, and transactions on the platform. Its launch made waves in the crypto world. An airdrop worth over $1 billion in tokens grabbed headlines and spurred massive activity. But beneath the excitement, one can't help but wonder, is Hype truly a sustainable model, or just a flashy marketing move? The tokenomic structure does seem thoughtfully designed. With 76.2% of the total supply allocated to the community, Hyperliquid's commitment to decentralization looks strong on paper. Yet, skeptics might point out that staking rewards of 2.3% annually feel conservative compared to other projects, possibly limiting appeal for those seeking higher returns. One standout decision was excluding private investors, centralized exchanges, and market makers from allocations. This move avoids conflicts of interest, but also raises questions about how the project plans to secure long-term liquidity and market stability. Can Hyperliquid's community-driven model hold up against competitors with deep-pocket backers? Ultimately, HypeX's success depends on its ability to drive adoption and utility. Whether through staking, governance, or trading on the native DEX, the token must deliver tangible value. Now let's explore how Hyperliquid balances blazing speed with the principles of decentralization. As I said before, speed is one of Hyperliquid's crown jewels. With its blockchain processing up to 200,000 transactions per second and finalizing blocks in just 0.2 seconds. That's lightning fast compared to most competitors. But as the old saying goes, you can't have your cake and eat it too. This blistering speed comes at a cost. Decentralization. Initially, Hyperliquid launched with just 4 validators, a far cry from the thousands that define more decentralized networks like Ethereum. By late 2024, that number grew to 16, signaling progress but still raising eyebrows. The question remains, can Hyperliquid scale its validator network without compromising its performance edge? The trade-off is clear. By prioritizing speed, Hyperliquid positions itself as a high-performance blockchain ideal for applications like derivatives trading and tokenized assets. Yet critics might argue that limited decentralization undermines the very ethos of blockchain technology. After all, what good is speed if it sacrifices the trust and resilience that decentralization offers? This balancing act is one of the platform's defining challenges. Whether it can find the sweet spot between blazing fast transactions and a robustly decentralized network will shape its future. Speaking of the future, Hyperliquid's growing adoption metrics might offer a clue about where it's headed next. Numbers don't lie, or do they? Hyperliquid's growth metrics paint an impressive picture, but they also invite a closer look. By the end of 2023, the platform surpassed $50 billion in total trading volume. Fast forward a year, and that number skyrocketed to over $600 billion, a staggering 12-fold increase. But does this explosive growth indicate genuine traction, or is it merely a reflection of a hyperactive market? One factor driving adoption is the platform's seamless trading experience. Retail traders and institutional investors alike seem drawn to its user-friendly interface and unparalleled speed. Yet some skeptics question whether Hyperliquid's reliance on aggressive token incentives and airdrops might inflate these numbers artificially, leaving uncertainty about its long-term retention rates. What's undeniable is the platform's ability to attract liquidity. Over $2 billion in USDC has been bridged to Hyperliquid, signaling strong demand for stablecoin-based trading. This reliance on USDC is both a strength and a potential vulnerability. What happens if stablecoin regulations shift or competitors offer better incentives? Despite the questions, Hyperliquid's adoption story is far from over. Its rapid rise is impressive, but staying on top will require more than big numbers. Transparency and trust will play a critical role, especially as parallels with less reputable platforms start to surface. Let's take a closer look at why some skeptics are raising eyebrows about Hyperliquid's transparency. Every innovative platform attracts its fair share of scrutiny, and Hyperliquid is no exception. While its technical achievements and rapid growth are undeniable, critics have started to draw parallels between Hyperliquid and past platforms like FTX. The question is, are these comparisons fair, or is Hyperliquid being unfairly judged for simply operating in the same space? One area of concern is transparency. While Hyperliquid boasts a community-driven ethos, some argue that the centralized nature of its early validator setup raises red flags. With only 4 validators at launch, expanding to 16 by late 2024, the platform's decentralization is still a work in progress. Critics wonder if insider involvement could influence decision-making, even if unintentionally. Another sticking point is the platform's ambitious promises. For instance, Hyperliquid's claim of being the fastest blockchain raises questions about what sacrifices are being made behind the scenes. Can speed truly coexist with the decentralized principles that blockchain was built upon? Or is this a case of prioritizing optics over substance? Skepticism isn't always bad, it keeps projects accountable. For Hyperliquid, proving its commitment to transparency and decentralization could be its ticket to silencing doubts. And with a mobile app and cross-chain USDC transfers on the horizon, the platform has plenty of opportunities to show it's more than just hype. Let's explore how these upcoming features could shape its future. Looking ahead, Hyperliquid seems to have big plans to solidify its position in the blockchain space. One of the most anticipated developments is the release of a mobile app designed to make trading more accessible than ever. Imagine executing trades or tracking tokenized assets from the palm of your hand. Another key item on the roadmap is enabling cross-chain USDC transfers through Circle's protocol. This could address one of the crypto market's long-standing challenges, interoperability. If successful, Hyperliquid could become a hub for seamless asset transfers across multiple blockchains. Yet skeptics might argue that relying heavily on USDC ties the platform's fate to the stability and regulation of a single stablecoin. And there's the bigger picture, Hyperliquid's vision of becoming the infrastructure layer for trustless and efficient finance. On paper, it sounds compelling, but the reality is that many projects have made similar claims. What sets Hyperliquid apart is its built-in on-chain monetization model for user applications. If executed well, this could attract a wave of builders. Ultimately, the future of Hyperliquid hinges on more than just ambitious plans. Execution, transparency, and adaptability will determine whether it becomes a cornerstone of decentralized finance or just another bold experiment. And with so much at stake, the next chapter of Hyperliquid's story will be one to watch closely. Now that you've seen the numbers, the vision, and the skepticism, the question remains, what's your take on Hyperliquid? Is it the next revolution in decentralized finance, or just another overhyped project? So, what's your next move? Will you dive deeper, explore the potential, and maybe even take a closer look at Hyperliquid? Or will you wait and see how the story unfolds? Let me leave you with this. Every innovation, no matter how grand, comes with its share of questions and challenges, but the real magic happens when you stop watching from afar and start engaging. If this resonated with you or sparked a new curiosity, make sure to subscribe to the channel and turn on notifications. Trust me, this is just the beginning of what we'll uncover together.